Much, Prakash, for getting us all those details. So that's public sector bank. Why the counters are indeed buzzing, because this whole news flow surrounding the FII limit to be increased from 20 to 26% is something that is indeed exciting for the market participants as well. But now with this, let me welcome on board Sunil Subramaniam as well on the show. And Mr. Subramaniam, a very good afternoon, and so good having you on the channel as always. Firstly, help us with your take on the latest news flow on the public sector banking space. The stocks have already seen quite an exciting move of late, because after the FM address, the top bankers and the heads of the public sector bank, and she actually told them how they can actually go ahead and transition into being a global bank. The excitement was all around, but with this FII limit getting increased, do you believe there stands a chance that the investors can also benefit, and given the whole business that they are in, the FIIs will be interested to increase their holding?
I do think so. I think it's a very positive development, and it also very clear that we want to make two of them into the world top banks list, right? So to that extent, I think that the greater the capital they need, the government is very timely doing this. And I believe, though it's not there in the rumors today, I think there could be a few more mergers within the PSU banking space to make them stronger. So I think that the next round could see that also happen. And what is the reason for this sudden move by the government? It's not that the government needs the money, right? And obviously some amount of loss of income due to the GST rationalization, some amount of this capital flow coming in might help the fiscal situation. But that's not the main reason. The main reason is that we see that with the GST 2.0, the consumption is going to go up. Now, that may come at the cost of margins for the consumption. That we'll wait and see. But what is guaranteed is, given by the numbers that the auto companies at least are putting out, strong top-line growth will come in. And the natural consequence of that is a rise in the capacity utilization in the country, and the hope that the private sector will kickstart their expansion cycle. Now, when that happens, right, what the private sector needs is a lot of supply of, let's say, engineering goods, obviously cement and steel, but a lot of these companies which supply these, the EPC contractors, are all smaller companies. Some of them are listed in the mid and small cap space, but there are a lot of them in the SME and the MSME sector. So a huge amount of financing will be needed for them to execute the order books. And it's the public sector banks who have decades of experience in lending to the SME and the MSME sectors. Now, at that time, there shouldn't be a scarcity of capital at the PSB level. Obviously, government doesn't want to recapitalize them and commit more capital from its own pocket today. So opening it up from an FDI perspective to foreigners makes eminent sense, because with a strengthened balance sheet, they can lend that much more. And so the loan growth expected over the next year, 2 years, I think that's what this will help them to easily finance it. And the fact that when they come into a global ranking system, they can raise foreign capital even from a lending perspective. So the FDI refers to the equity in their ownership, but they could raise either masala bonds, which is rupee denominated loans outside India, or through external commercial borrowings. So all of this looks at a combination of capital plus strengthening their borrowing resources so that they can lend adequately. And these loans, I believe, would be quite profitable for the public sector banks, because to the SME and the MSME sector, interest rates are generally in the 12 to 14%. So obviously, the net interest margins of these banks will also look to widen and improve. So hence, there could be an attraction for FIIs to invest in the growth story of India through the PSB mechanism. So I think it's well timed. So one hopes that as the story pans out and they come in, domestic investors already in the last 6 months, you see PSBs have rallied tremendously, right? I think double digit, the growth is there compared to the Nifty's 6 or 7%. But I think if you take the medium term perspective in mind, I think they are good investment bets at this time for wealth creation.
So that's the take coming in on PSBs. Let's also take it across to my colleague Rabinder, who's waiting by to tell us what's the current FII ownership status of the top PSU banks in the country, and how much inflow can we expect them to see, can they generate if limits are raised, as we are understanding from our sources. Rabinder, over to you.
Well, as PSU Bank is in buzzing in today's trading session, and the key trigger behind that is the consolidation may happen in amongst the PSU Bank. And as per report, government is looking to increase the FI limits from 20% to 26%, but the government will not reduce its stake below 51% while allowing higher foreign stakes. And India is aiming for two PSU banks among the world's top 20 bank by 2047. And if we look about the top 10 PSU bank with the highest FI ownership, Canara Bank topped the list with highest ownership of 11.7% as of June 2025. But when we compare this by the current limit, which is 20%, total headroom left is 8.3% among the PSU bank, which is followed by State Bank of India with 11.4% FI ownership, and the total headroom left is 8.6%, followed by Bank of Baroda with 8.5% FI ownership, and headroom left is 11.5%, followed by many more banks like Indian Bank, Bank of India, Bank of Maharashtra, Central Bank, PSB Bank, UCO Bank, and Indian Overseas Bank. And if the government approve the FI ownership from 20% to 26% as per Novama alternative, State Bank of India could see a biggest potential inflow of $466 million, followed by Bank of Baroda and PNB to $76 million each, and followed by Canara Bank with $64 million and $62 million for Union Bank of India. Separately, Indian Bank is expected to see fresh inclusion, which could bring inflows around $177 million. And if the current cap is increased from 20% to 26%, this will help PSU Bank to raise more capital. So back of this, PSU Bank is in focus in today's trading session.
Well, indeed. Thank you so much, Ravinder, for getting us all those details that amongst the top public sector banks, how much more headroom is there for the FIIs to increase their ownership if at all this comes into play. But on the bottom of your screen, you will also have some flashes from the cabinet press briefing that is still underway, because it's not just the shipping sector which has confirmed an outlay of almost 70,000 crores, but some of the projects with respect to the railway sector has also been announced. With the railway sector doubling of the railway, there is a financial support of 2,192 crores for the railway lines of Rajgir and Pillia lines as well. Along with that, there's also a national highway 4-lane project being also approved. So we'll watch out for more details from this one. But with this, let me move on to the consumption story then, because today we caught up with the CFO of Metro Brands about their strategy to pass on GST cut benefits to the consumers. Let's go across and listen into a slice of that conversation.
Obviously, there's no need to change the price tag. It would be an inefficient process. But starting 22nd, that's yesterday, we have already rolled out the change for the customers. So the discounts are already on. It's very well communicated on the invoice, and obviously across various medium within our stores and otherwise through digital means to our customers. So changes have already been implemented. We're not looking at changing price tags. But we are obviously making sure that wherever the GST benefit has come in, we are passing that benefit to the customer through discounts.
In terms of the larger festive season that is coming up, GST changes obviously will help in that. But overall, what kind of sales growth are you seeing just in terms of the consumer sentiment also improving? People are going to accrue more savings with the GST changes also. So are you looking at a growth higher than last year this year?
See, we have, I would avoid talking about short term, but for medium to long term, we've always guided for 15 to 18% growth in our top line. I think with all the changes that government has done, starting with tax rate reduction in last budget, RBI reducing interest rates, and now with this GST change coming in, we feel customers will be saving in their monthly budget, and I'm sure that money would come out in some sort of consumption, and obviously we feel footwear would also sort of benefit through that. So I think overall industry would gain, and we feel customer buying more would be the upside, because obviously GST reduction is passed on as discount. So that's what we sort of see. With all this change, we feel pretty confident that 15 to 18% growth that we have guided over the times, we should be able to achieve that comfortably.
Okay, so that's the CFO of Metro Brands in conversation with my colleague Anjali. They're optimistic about achieving the growth plans that they've laid out for the company on the back of these GST cuts, festive season underway, lots of tailwinds for the overall sector. When that note is given to away, so we can be right back on the other side. Hi there, welcome back to Closing Trades. You're catching us live from the SBI Live studio and just revisiting what the market is doing right now. About 15 minutes or so left of trade. Just seeing what the Nifty is right now, and that cut seems to have intensified slightly more than when we last spoke about it. About 0.5% lower coming in for the Nifty right now, 25,050. So holding to that mark right now. Sensex also 0.5% cut coming in. It's Nifty Bank that's lower by 0.7%. There's no optimism at all right now in the market, at least towards the larger end. Even if you take a look at what the mid-cap index is up to, big cuts coming over there, a whole lot of 1% cut coming in on the Nifty mid-cap space. But, before the break, we were just listening to my colleague Anjali in conversation with the management of Metro Brands and how they were talking about how they're confident about their growth going ahead and everything looks good. Sunil sir, I want to get your take on some of these discretionary categories that have seen the GST benefit below 2,500. So your textiles or footwear. Any outlook on how things could change around for these companies, and if this is a fillip enough for the companies to once again see some meaningful volume growth?
So I think that at the lower end, right, what happens is that while this is definitely a saving, in actual rupees, it's not that much, right? So what I'm saying is that it's not a temptation at the lower end to really go and buy more. They will get savings. Somebody who's already maybe postponed his purchase will go and execute it. But I think that the companies will have to work with the bankers and I know even these are not EMI based products, right? Most of the effect of the GST 2.0 I see as coming in the segments where EMI also plays a role in the buying process, right? So durables, for example, even auto, for example, maybe even real estate, right? But if you take at the low end retail, right, the customers buy it. Somebody doesn't postpone a purchase of a new leather shoe, because of the price. It's low, but the sentiment is there that there's been a reduction. So there would be a slight shortening of the replacement cycle of these items there. So from that point of view, while there is a saving there, I'd like to wait and see how this translates in terms of the numbers. Because especially around festival season, you're also looking to make the big budget purchases, right? Because you remember the festival by that. You go to the shop and look for an air conditioner, refrigerator, or a car. So I think the biggest impact will be seen in the EMI-based high-ticket category, which have got the maximum benefit. It's either from 28 to 18 or, some cases from 12 to 5, but most of them. So I think that this, the category below 2,500, where the benefits are there, I would say that let's wait and see whether people actually go and do it, because whatever savings they get out of the whole package, they would like to deploy into the higher end category. If you understand what I'm saying, let's say I buy a low end product and I buy a high end product. I'm waiting for the high end product. The low end product will become cheaper now, right? So my replacement, but I'll still save some money and I'll redeploy through a EMI based purchase. So my focus is that the high end consumer durable discretionary items would probably be a little more in focus in the festival season. These products, when they get their natural replacement cycle, not necessarily at festival, but over the course of the year, right, would see the benefit of the GST cut flowing through.
No, absolutely. Fair point. And indeed, that is also getting reflected into the stock prices as well, because select counters within the auto pack, they are seeing no stopping. But Nagraj, let me have your take on one of the other sectors, and that is power space. I believe within power pack, you have already seen, and I guess your call was on NTPC, but one of the other players, Power Grid, even that stock is also buzzing in today's market as well. And what I see is that it's been holding quite smartly. And do you believe that it's a breakout where one can really bet on, given the fact that it's the top gainer on the Nifty 50 right now? And after a while, we are seeing the power sector coming back in flavor.
Yeah, rightly said. It was underperforming recently. We have seen some range-bound action, and today it has showed some significant move from the lower levels and hitting the 200-day EMA hurdle on the charts. I think the overall chart pattern is looking positive. I'm expecting upside breakout this time, and this stock could move further in the next at least for 1 week. 300 is going to be 300, 310 is going to be the next upside resistance to be watched in the near term.
All right, so that's the take coming in on power grid. Let's watch out for that and the overall take on the power space as well. But on the flip side, if we see the top loser on Nifty 50, and that indeed is Tata Motors. Because do remember, almost 70% of the revenue that comes into Tata Motors is from their JLR division. So the 30% that is left for the India division, there too, yes, the company has come out with exciting numbers with almost 10,000 of deliveries that has been done on day one. But the JLR business is actually getting impacted with the whole cyber attack that was through. Earlier, it was anticipated that from 24th of September, the production will get back on track. But now it's been shifted towards the end of September month. And analysts do believe that it can impact the financials of the company. But Kunal, wanted to have your take on this one. Almost a 3% cut coming in on Tata Motors. What does it mean? Is the stock ready to fall even more?
Yeah, it looks like, and it's been an underperformer in the last 1 month. At a point when the other two-wheeler majors, Eicher Motors, Hero MotoCorp, Bajaj Auto, I think these stocks rallied around 15%. Tata Motors is clearly disappointed. Even on the four-wheeler pack, of course, from Maruti, M&M, etc., those stocks have done spectacularly well in this last 1 month of price recovery. But for Tata Motors, the stock was unable to scale even about that 735 to 740 barrier. And I think that's what could be a breakout point for Tata Motors. I'm not sure when that is going to come, but then I think it's always better in these kind of stocks that you wait out for that confirmation of a breakout. For Tata Motors, that level is just about that 735 to 740 barrier.
Okay, so that's a take on Tata Motors. Nagaraj, what is your take on Minda Corp? We've seen the stock see a very big surge today, about 9 to 10% uptick in intraday only. And the management has come out with its 2030 vision, wherein they're sounding very optimistic on the revenue growth as well as the margin expansion front. What is your chart check on Minda Corp? Right now also, as we speak, the stock has slipped from the day's high, but nonetheless, almost an 8.5-9% uptick is something that we're still seeing on the stock. Your take here?
Yeah, it's absolutely fine because the stock has bounced back sharply from the lower level. We have seen some significant breakout from the lower levels. On the weekly chart, it has witnessed a decisive upside breakout of downsloping trend line. I think overall chart pattern is looking positive. We have seen some sharp upside volume also. So the overall chart pattern is suggesting, though the stock has moved up in the short term, there may be a smaller consolidation, and eventually we could see in the long term the stock is moving higher. And the next important resistance to be watched is around 620, 625 levels. That could be achieved in the next couple of months.
All right, so that's the take coming in on Minda Corp. But Mr. Subramaniam, just wanted to have your take on the credit card player, SBI Cards, if at all you can speak particularly on this, because in the latest, the stock has been doing quite well. And to the theme that you have been flagging off, that people might make all those big ticket purchases, do you believe that going ahead and as we move forward with this festive season and the cheer around, SBI Card could also be a beneficiary?
I'd rather not do a stock-specific answer.
Okay.
Can you pardon that?
All right, no worries. But Kunal, a quick chart check by you. 1.5% jump. I believe that you have been liking this stock of late.
Yes, Srishti, and I think at current levels also, I would believe that the stock should be poised for a break about that 900 mark. Rarely do you see a stock recovering quite strongly on the back of higher volumes, consistent price trend, and very good follow through in terms of price moves for the stock price. And we've seen all the ingredients for SBI Cards, and the recent move of 10% broadly from sub 800 levels to now 885, 890 mark, the range the stock is trading right now. I think it's been a very strong move in that sense for the stock. And generally we've seen that after a phase of a pause or a mild consolidation, the stock gets ready for round two in terms of the price uptrend. And I believe in that second leg of price uptrend, hopefully SBI Card should be able to break past about that 900 mark. So bullish on the stock. And from a short-term play, I would look at 904 to 914 as a near-term target range for SBI Cards.
All right, So that's the take coming in on SBI cards. But Mr. Subramaniam, any take on the real estate pack as well? Because of late, the counters haven't done that well. Because even though the numbers were quite very great, but some experts do believe that the best is rather behind. Though the pre-sales number are looking quite okay, but in terms of the demand, that is seen to be plateauing in some of the key markets. What's your sense on the real estate pack? Because of late, the stocks have also seen a bit of a decline.
So I have a slightly contrarian opinion there. I think that ultimately the real estate stocks will do well, because I just mentioned this part about the EMIs, right? About the savings, and even the real estate has been a beneficiary of GST cuts in cement and a lot of other spaces. But right now there are factors affecting this, and I'll explain those to you. So first is that this is not a good season for real estate. The monsoon time, construction activity comes down. So to some extent, real estate demand is also a function of the fact that rural, especially, people don't build homes at this time because of the rains and other. That's one point. Second is that, yes, it's been an underperformer over a period of time because the real estate was the biggest gainer and loser, whichever way you look at it, of the polarization of the consumption story, right? So you saw it in automobiles, you saw it in this, that very high-end vehicles were selling before the GST cut, and the low-end was struggling, like a two-wheeler or an entry-level car. Similar to the real estate, affordable housing hasn't gone anywhere for quite some time, and it's the premium properties, whether it's in Gurgaon or in Mumbai or Bangalore or wherever, it's the premium high-end properties that have been selling. So builders also a period of time have converted their stock into the high-end segment. Now there, obviously, the number of units are less and a lot of these units have got sold. But now with the GST cuts coming in, right, we expect the affordable housing to pick up. But is the real estate sector ready for it yet? Because they have to get now parcels of land and they have to build and they have to plan for affordable housing, a larger number of unit product, and then market them. Obviously, that's take a bit of time because given the fact that there wasn't much demand in affordable housing, they had also, whatever land they got, they tried to make it into a premium property. So now the change in mindset will take time to execute. You can't just flip a switch and do that. So now when they acquire a fresh parcel, they look at the positioning because these have to be slightly on the outskirts, whereas premium properties can be in South Bombay, for example. So to that extent, you would give it a bit of time for the real estate sector to gather its act together and do it. And anyway, in the festival season, right, people like to buy demonstration products like a car, which you can show, or you buy a big refrigerator. So people visiting a home show it. So the festival is a time for that kind of a celebration and people showing that, oh, I acquired this at Diwali or at Christmas. Whereas houses are not that. Houses you buy, it takes 12, 18 months to construct. So I think that the second order of the GST cut, combined with the rate cuts with the banks and all of that, will play through in a little bit of time, maybe 6 months time to play that out. By the time the developers would also launch a lot of affordable housing, those EMIs also, when they come down, will look more attractive. And I expect a affordable housing boom to play out in the later half of this year and into the next year. So to that extent, 6 months, it hasn't performed compared to the consumption sector. Real estate hasn't performed. So it's probably a time to start buying on the dips and hang in there. Don't expect an immediate bounce back, but I think that's a good longer term play.
All right, let's watch out for that. But with this, Sunil, we let you go. Thank you so much for taking the time out and speaking with us. So just a few minutes left before we